There's so many things I wanted to ask you about. First, let's get to the news. You had an application recently which didn't get the thumbs up to extend trading hours. Are you going to revisit that application anytime? Reapply for that anytime soon?
No, currently we don't have plans because this is an ongoing process. And some point India has to do what world does in terms of longer trading hours. But currently probably brokers think it's the cost vis-a-vis the benefits they get by appointing newer people and things like that. That's where I think they opposed it, some of the smaller brokers. And broadly, currently that process is stopped, and we'll see what to do later on.
Okay. So we'll take a step back from that. I think there was another one on Friday. I think SEBI also came out with some guidelines on effectively trying to ensure that some of the real-time stock data doesn't get misused. You come to mind as I wouldn't say a direct target of that, but you're affected by that. Does that have a cost implication? Do you see that being disruptive in any way to trading operations?
No, it's basically in India, the data is actually democratized, so actually exchange data. So we are supposed to give the data on exchange websites, and also the brokers get the data free for their customers on real time. So effectively, what SEBI is trying to do is to ensure that the same data doesn't get misused for gaming outside of the exchanges and also manipulating people's minds and things like that. So that's where I think this regulation is more for stopping illegal usage of data. Nothing to do with the income of the exchange, because exchanges don't derive much income in India from data, unlike other countries. So broadly, it's more of sort of a public good kind of an activity.
So others outside the market, stakeholders, don't have to worry. We're not even going to see any effects of
not
that
at all
behind the scenes. Okay, how's the market doing? Elections, post-elections, you're smiling. Take us through what's going through your head.
No, markets are even now at the all-time high, but in a way they could have been slightly higher. It's just that the market has taken a sort of a pauser, waiting for the election results to come. And six stages have gone. So one stage is remaining of the election. June 1 it gets over. June 4th is the result. So broadly, next 1 week will be a little sideways. That's my current understanding.
Okay, and that goes into I think you're speaking at a panel here at the conference on, you guys do very well as far as attracting retail investors. And the flow, what do you guys think you're doing well, and what are the best practices you think some of the other exchanges in this part of the world can take from that?
In a way, India is a large country. It's 17% of world population, and it's highly digital country. The remotest corner of India, everyone has mobiles and which are smartphones, and very, very nice bandwidth at extreme low cost. So people are able to connect to us. We have now close to 95 million unique investors registered with us.
95 million?
Yes. If we were a country, we would be in top 20 or something like that.
Yeah.
But effectively, lots more people have come in post-COVID. When we were going into COVID, we had like 25 million unique investors, and we are an ID market, so we know each investor, even their phone numbers and their addresses and email IDs. So there are not many countries with that kind of population in the world. And so we have basically because of automation and also the growth, young people in India are earning more than their parents at the retirement age because of the way India has come up. And that's where they have more money to spend, but more money to save, and also their parents were investing in physical assets like land or in gold and all. Yeah. Now youngsters want to sort of invest in equities. So that's, I think, a good change that has happened. Financialization is now happening. Formalization of finance is happening with all the high-tech things like direct benefit transfers and sort of e-payments. They've all helped get more people into the formal investing.
Right. So let's help the massive retail base that you guys have. Do you think, well, not you think, well, you could also give your take if you want. Based on the conversations you've had with brokers, is the market expensive?
Currently...
20 times, let's say?
Yeah. Basically, for me, I've seen when a country grows, say you take Japan in 1970s and 80s, or even China, for that matter Europe, when the countries grow, you may think, because people actually discount the future, not the past. What you say today, why something is expensive or not, it's about yesterday's earning and today's price. Whereas what the market is actually telling you is that they are looking at tomorrow's earnings and today's price, right? So that's where the dichotomy for people like me and you would not invest, who are not allowed to invest. We look at the past and try to say that future here looks a little overpriced. While in case of China, you can see the price earnings is very low because people don't have a hope of earnings going up. So that's where the price earnings look, although earnings may be higher, they think that earnings will go down. While in India's case, people think the earnings are going to go up. So countries and societies which have a higher hopes of growth, those countries will have a longer term price earnings higher. The countries which do not have a future hope of good growth, then their price earnings will be lower.
So to clarify what you're saying, are you saying that China doesn't have a visible earnings growth story?
It is their investors. Their investors think that the earnings will continue to go down year on year. And it cannot be like a blip for a year, but like on a 10-year scale, 20-year scale, that's what people...
There's a premium being built in into the market. I mean, I think you've been in Hong Kong at least twice in the last 5 or 6 weeks or so. I saw at the other conference as well, who will go unnamed. At this point, what's the sense you're getting from investors here? Because it's the same group of investors that have taken money, allocations from China, cyclically and tactically taken them to India, and might be pulling that out of India now that the Chinese market is starting to come alive.
China has, in a way, last 3 years also, China has kind of promised quite a lot and then it has not performed because China is actually a much larger market in terms of the numbers. And each time people have, like post-COVID, people had a feeling that there's going to be huge growth. It didn't come out and they had to lose money in a way. Second part, I think people are worried about whether if they make money, whether it will come out or it will be allowed to come out or not. So that's also an issue. Well, as I met a few investors yesterday, today also I have some meetings. What they tell me is that post-elections in India, there's a huge amount of, the results, huge amount of money waiting to come in. So it remains to be seen how both of us, both countries perform, China versus India. And
should we look at it as, a zero-sum game? Can both markets, you think, perform, or is it one over the other?
There is enough and more money waiting in older countries because older countries don't see older by age population. They don't see that kind of growth in their economies, and so they are willing to invest in countries with expected higher growth, and that's where many of them are coming into younger countries.